All right, it's your boy Juicy Banks, and as you guys all know, I've been trading a little bit over 10 years, and I made roughly around $5 million in profits. Now, during this journey of me making $5 million in profits, there's a lot of ups and downs, and if I can do this all over again, this is what I would tell my beginner self, step by step, as far as for how I would coach myself to go ahead and handle myself in this field and in these markets. And that's exactly what you're gonna learn in this video today. The 5 key steps that it takes to go ahead and handle your trading and master your trading with as little as no capital at all. Now, in this video, we're gonna be basically covering all the way from psychology to all the way as far as for brokers and prop firms that you should use. So there's 5 key steps. So you wanna make sure that you stay exactly all the way to the end and watch this video in its full entirety. Now, with that being said, let's jump right into it. Step 1. Psychology. When it comes to psychology in this field, there's 5 things when it comes to psychology primarily that I focus on. This game is broken down into 2 things, right? There's 80% psychology and there's 20% strategy. We're gonna go over that 80%. That 80% is super important because you need to be able to condition your mind to be able to lose and make money. That's the field that we're in, right? When it comes to Forex, when it comes to crypto, stocks, shares, ETF, bonds, this strategy that I'm gonna be also teaching you in this video today can be used across all those things. But you can't approach these things if you don't have the right mindset, right? So the mindset is critical. The mindset is kind of super duper important when it kind of comes to this field. And psychology is almost like a roadmap as far as for what to look out for, the emotions that you're gonna endure, feelings that you're gonna endure, right? Now, when it comes to psychology, there is 5 key things that I like to kind of touch base on. And the very first one that we're gonna kind of make sure that we go through is greed. Let's talk about it. So greed is one of the main primary factors when it comes into trading. You should be able to kind of see the PowerPoint somewhere here with on the screen. But greed is one of those main primary factors that I feel like in trading, you can never ever really like cure. You can only treat it. You're always gonna get greedy, right? But you have to control it. But here's some things that greed affects in a trading environment. The first one is over trading. You'll be taking like anywhere from 10 to 20 trades within a day. Like it's really not needed for real. You know what I'm saying? Like you should be taking only a couple of trades within a day. You should be having like some type of tailorized plan. But when you're over trading, you're literally just taking trade, like without no knowledge whatsoever. Don't do that. The next one is stacking. Now, in this game, there's a right way to stack your positions and there's also a wrong way to stack your positions. When you're stacking positions, it's literally as it sounds. You're adding position on position on position on position, all at the same price point that you're trying to enter the market. And again, there's a right way to stack and there's a wrong way to stack. But when you're stacking, you're just literally putting orders. There's no strategy to it. There's no nothing. You're just placing orders. Another thing that affected me critically in my beginning stages was closing out my trades too early. Sometimes I would over leverage or I would use more risks than is needed per position. Sometimes this is where it affected me the most really because I would over leverage. I would drop that position when I'm entering in the market and I would have some sort of a sensation to where I wasn't patient to let the move even play out. Right? I'll just close the trade early and then it'll go in my favor. Even when I didn't over leverage, right? I would place a position and I would still, some way, shape, or form, still close out the position because I didn't have the patience to kind of let the move kind of play out, right? That necessarily comes from a form of greed just because it didn't happen when you wanted it to happen or it didn't happen how you wanted it to happen. So don't be greedy in this game, you feel me? And I feel like the last thing that it really affects in this game is also chasing profits, right? Like, when you're chasing profits, there's 2 ways you can do it. You can chase profits via social means. And what that means is like, boom, like perfect example. Everybody knows that me, Juicy Banks, I've been doing an account build, right? So let's just say, hey, we're friends. You kind of see me. You've been following my account build process that I've been doing, right? Like I'll show you right now live and in your guys' face. Like the account build that I'm doing as of right now, I am at, let me show you. Hold on, logging in this way. Let me see, boom, all right, boom. So that account build that I've been doing, right, as you guys can see, it's at 84K. So let's say I posted, I made like 15K today, like 15K today. When you're chasing profits via a social means, right, like you'll see me kind of post my profits and you'll be like, well, damn, bro, Well, Juicy did it today. Juicy made 15K. Fuck. Juicy just went back in again and made some more money. God damn. Well, if he's going back in and we trade the same pair, let me go back in. No. At the end of the day, this game is derived off of you, right? You should be learning from the market itself. You know what I'm saying? But at the same time, if somebody has knowledge for you that you can go ahead and skip through, you should be learning from them, right? You should be learning from the journey that they took. So when it comes to chasing profits, flow with it on your own time. Another thing is this, right? This is the second way that you can chase profits. You can chase profits. Like, let's say you're trading New York session, for example, and you have a pip goal of like 50, 60 pips and you hit your pip goal, right? You should be done for the day once you crush your goal. When you're being greedy, you're like, damn, well, I see another setup. Let me go back in there. Fuck no. You shouldn't be doing that, right? You shouldn't be, one, if you hit your goal or if you didn't hit your goal for the day, you shouldn't be as quick as to jump back in again unless you have all your T's crossed and your I's dotted. But in the example that I'm using, when you're being greedy and you already hit your goal, like you already hit your goal and you're still trying to be greedy, hell no, you're tripping. Don't do it. You feel me? So that's really like when it comes to greed. Now, I have like 5 key things when it comes to greed alone, and that's number 1, right? Like, greed will destroy even the best trader. I don't care who you are. I don't give a fuck who you think you are. Greed will humble you. Greed will bring you down to your knees and have you praying like, please, please go up. You don't want to be that. So my whole thing is don't be greedy. I've seen greed crumble the mightiest of traders. You dig what I'm saying? Like, you don't want that to be you. 2, learn to be consistent before upping your lot size, right? In this game, I feel like consistency buys you your freedom. Consistency buys you the ability to kind of grow with your process, right? So if you are being consistent, then you can up your lot size. For me, I say this: after a week of 2 weeks of using the same lot size and you're consistent, then you deserve the rights to up it. But you don't just up it just because, like, you have no proven knowledge that you can even use this lot size sustainably, win or lose. So you got to make it make sense. You feel me? Number 3, this is my favorite. Think broke, right? Now, think broke is like really like a humbling sensation for me because, like, there's been a place in time to where we've all been broke, right? Or we've all been close to broke. I remember when I used to work at a call center, right? I was working at a call center and I was making roughly around, I don't know, I think like $13, $14 an hour, some shit like that. And I remember one paycheck, I literally had like $200 left after I got paid. You know what I did? I divided and conquered. I took $100 to get me to and from work, and the other $100 I split it up. Like 50 was for food, 50 was to my bad habits, and then 50 was like hobbies or whatever the case may be. But my whole thing was, when I thought broke, I divided and conquered what I had left. It's the same thing that you got to do in the markets when you're chasing your goals. If you have a goal of 5K or 10K or whatever your goal is, right? Like for me back then, I think my goal is to make 2K a day. I wasn't trying to get it all in one move. I would take this position here for 30 pips, make my cool 500. I'll take another position here for 500, and then I'll take another 2 positions, and then I'll make my $2,000. The whole thing is you got to divide and conquer sometime for your goals, right? Don't be scared. Think broke, right? Think in that scarcity mindset of how you can preserve but still make it last. That's the whole mindset that you want to have. Number 4, right? Learn the skill set first, then worry about the money. A lot of people in this field, man, they try to just like learn, like they try to just like make money. And it's just like, bro, you should be trying to focus on the skill set and have another filtration to help you make the money, right? Because when you're trying to focus on the money, you're not going to focus on the potential of the craft or how the craft is even able to be delegated to be done right. So you just got to kind of just be mindful of that. And number 5 is like, you'll lose a lot of money a lot faster than making it in the markets when you're being greedy. Bro, I've seen greed kill people's psychology and empty their bank accounts, right? Like greed is one of them things that hits 2 ways, bro. It takes from you mentally and it takes from you cash-wise. So it's like, you just don't want to be greedy. There's too much to risk with that. You dig what I'm saying? My overall tip for greed overall is just focus on consistency. The money's going to come. On to the next, right? Lack of confidence is the next one. Lack of confidence is big for me. Lack of confidence is, like you not being confident in the market. You're not sticking to your original bias. You're saying, oh, it's going to buy. Oh, it's going to sell. Motherfucker, pick one. Pick one. It ain't going to do both. Pick one. You feel me? That's like overanalyzing. You'll be on the 30-minute time frame trying to look for a million different things in a second. You'll be on the 1-minute time frame. You'll be flipping through time frames, not giving them enough time to do what they need to do, thinking that you're going to see change. Overanalyzing, analysis paralysis. Sound familiar? And then like psychology in general, right? Like I feel like there was like a time in my path where I like one day I hit like 100 pips and I was like wondering like, damn, well, can I do that again? I wasn't confident. You feel me? Like I was not confident. So that leads me into number one. The most confident trader will make the most money. Listen, I don't care who you are. I don't care if you're in a room full of 1,000 druzis. I don't give a room if you're in a room full of the 1,000 of the best traders. If they think it's a sell and you think it's a buy, stick to your own analysis, bro. It doesn't matter. What matters is how you perceive the markets. Ain't nobody's mindset better than yours, and you got to train yourself to get like that. So at the end of the day, you have to be confident no matter what. Be confident wrong, be confident right. You're going to learn at the end of the day. You feel me? Number two, the confidence that you actually are looking for comes from actually putting in the chart time and the knowledge. So once you have the knowledge on how to do it right and how to execute it right, which we're covering in this video, once you have the knowledge on how to do it right, it's just back testing. I back test for at least like 30 minutes every day. In some way, shape, or form, I'm looking at my charts, I'm marking up, I'm doing something to make sure that my iron, my sword is sharp. So when I'm in these markets, I'm slaying, I'm cutting, I'm destroying. You feel me? And that's what you want to do when you're in this field. You know what I'm saying? So just remember, the confidence that you're looking for comes from chart time and and knowledge, right? Number three is like this, right? Trust in your original analysis and let it flow. You're either going to be right or you're going to learn where you went wrong. But to me, there's no losses in this game. A loss is something that you can't come back from. Like, I lost a family member this past week, right? Like, that person's never coming back. But like a learning opportunity, for example, if you took a $300 L in the market, or I took like a $30K L. That was a learning opportunity. You know why? Because I was able to study, I was able to break it down, I was able to see where I went wrong, and then on top of that, I was able to make it back. I got another opportunity that became a winning opportunity where I made that 30K back and more. You know what I'm saying? So at the end of the day, understand the difference between losses and learning opportunities, right? And I'm big on what I put into the atmosphere and what I speak on, and I don't take losses, baby. I take learning opportunities. You feel me? So it's just like that, right? Number four is like a big one because like it used to affect me in the beginning of my journey. Like, it's like never let a loss take away your confidence. Like this game is going to be full of learning opportunities. I said loss, forgive me. This game is going to be full of learning opportunities, right? These opportunities, they're going to come, they're going to take from you, and you should never, ever let it degrade you. You should never, ever let it bring you down in any way, shape, or form. This game is going to be full of those. But what you have to remember is that if there's an opportunity to learn, there's an opportunity to win, right? So make sure that you learn from those opportunities that the market presents to you, right? But learning is never backwards. So you should be growing from that. You should be understanding that. But learning opportunities are inevitable. They're going to happen, right? The biggest thing is this. Every trade you take is either going to be a win or a learn. So just always remember that. Next thing, impatience. This is my favorite one, right? Because boy, this is me. Shit. This is one of them things where like, you could fix it. You just got to add some timeliness to your process, right? So what is impatience? What does that look like in the market? That's not waiting for enough confirmations, right? Like, oh, I need a fib, or I need a trend line, I need a structure point, or I need a candlestick pattern. Those are all things that you need to take a trade, and you should have a minimum amount that you need and a maximum amount that you need. If you don't know what that looks like, wait till step, I want to say it's 3. Wait till step 3, and you'll be able to kind of see that. But again, not waiting for enough confirmations when taking a trade. Next one is closing out your trade in drawdown, then watching it go in your favor. Bruh, this is a big one for me. Like watching my actual trade go in drawdown, closing the shit out, and then bruh, a couple seconds later, the trade goes in your favor. You know why? That's because you're fucking impatient. You're not giving your move enough time to breathe, enough time to develop. You're not even seeing where you are in that spectrum of where you entered. You're not giving it enough time to kind of see where it's at. And that's impatience. So if you have that problem, you need to chill. For real, for real. The next one is rushing the markets. Bro, I remember on an a news day, I'd be like, bro, Why is this shit not moving? Or a post-news day, right? After the big move didn't happen and we're waiting for like the next major move to happen. Sometimes the move will be ranging or doing something along the such to where it's taking long to kind of go through, right? This is like where it kicks in the most impatience. You're like, bro, what is this thing doing? Like, you have to remember that there's sessions that the market moves in, that there's days that the market's going to be most volatile in. Make sure that you're tailoring that into your strategy so that you don't be impatient, please. Because, like, I hate to see it. You know what I'm saying? Number one is this, right? Patience is key. I don't care who you are. If you don't have patience, then this game is not for you, right? You're going to fuck up and you're going to learn and learn and learn and learn and learn. You have to have patience, right? Like, I've been doing this for 10 years. 10 years. Keep that in mind, right? That it's been a long journey for me. But in those 10 years of me doing this, there was a lot of ups and downs. And if there's one, it's it's have patience. You're going to get to where you need to be. So don't worry. You're going to get to where you need to be. Are you going to have enough patience to allow yourself to actually get there? That's the biggest thing. Number two is a big one. Stick to your trading plan. If you're waiting for the market to kind of hit like a certain support level or even a resistance level or even form like a candlestick pattern for you to enter, then just wait and be patient. Like, what are you rushing for? What are you rushing for? What are you rushing for? My point exactly. So it's just like, if you need these confirmations and you need to visually see them for you to actually take the move in this game, just wait. It's what you need. Why are you rushing? It's what you need. You're being impatient. Number three is this. The market moves when the market moves. Like, the market moves on its own time, not when you want it to move. So like, a lot of y'all like are gonna get antsy. Y'all gonna get like, what's going on? Like, just remember, there's times where the market's going to be real volatile. There's times where the market's going to be slow. There's times where the market's going to be developing. These are all things that you just got to be patient for, man. You know what I'm saying? So just chill. It's going to mess with you a bit, but just chill. You're going to be all right. You're going to be all right. This next one is key, right? Like, don't rush the process. It will happen. Like, just don't rush. There is no need to rush nothing in this game. Like, again, my whole point of this video is I've been doing this for 10 years. This shit shouldn't take you 10 years. If you just understand and learn what you need to learn now, it shouldn't take you 10 years. The whole point of this is to shortcut what I went through and to put it up in a form so that you can get to where you need to be quicker. So it's just like, when it comes to like rushing your process, understand there's going to be good days, understand there's going to be bad days. Just make sure you see that light at the end of the tunnel for the vision that you have for yourself with this. Remember why you're starting this. Remember why. Because I'm telling you, when you're being impatient, man, that impatience is going to mess with your brain if you let it. Only if you let it. And again, it's going to happen. It's going to happen. But just remember that, again, don't rush. You're going to be all right. You feel me? Number 5 is a big one. Oh my God, it's a big one, right? Give the market time to move and time to breathe, but keep in mind that market structure is key. Market structure is the main foundational technical. It's actually what we're going to actually be coming over in step 2. So market structure and price action are like the main things that you really, really need to be the best thing in this game. The best thing, right? It's key. So it's just like, I look at impatience like this. Being impatient will cause you to lose so much money, so just wait. And what I mean by that is like, perfect example, like in the real world, we all hate traffic citations. I know I do, like a motherfucker. I park somewhere, I make sure I pay. Because if I come back, I get that little fee plus that bigger fee, I'm not with it at all. So it's just like, bro, just make sure that you're being patient in this game, because no one likes to have money taken from them. It's annoying. So if you be patient, you avoid citations in the market. That's just how I look at it. Next one, right? This is a big one. Consistency. Like, this is one of those things that if you do this right, you will be the greatest. Mark my words. You will feel like you're the greatest. Mark my words. This is so important. What does consistency look like in the market? Or what does consistency look like when you're fucking up in the market? Because I want to talk about fucking up first, right? That's you blowing accounts. You're going to be able to kind of put money in the account, $100, right? Oh man, let me try this out. Blow it, gone in seconds, right? $1,000, put it in my account, gone, right? Impatience is just, bruh. Like, I blew in so many accounts, but at the same time, I done made it all back on my process. Yeah, I made it all back, right? But it's just like when you're being impatient, when you're being like not consistent, like you're blowing accounts, you're fucking up. When you're not being consistent, like, are you not like consistent in the market, right? Like, you're gonna have problems even taking profitable trades. Your fucking trading is gonna be win loss, win loss, win loss, loss 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 loss, win 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 loss. Like, it's not consistent. You can't consistently take a set of profitable trades back to back. You know what I'm saying? Like, and it's gonna happen. It's okay. But if you're doing that, you're not sticking consistently to your process. And like, the last one is this, like following your trading plan. How do you expect to be consistent if you can't even follow your own rules for success in this game? Like, your trading plans is rules and regulations to safeguard you and protect you in this game and in this field. And it's just like, at the end of the day, like, you gotta kind of know, like, again, your plans for success. So it's just like, this is all key. My first one for consistency, make a trade plan and stick to it. If you don't have a trading plan, I will make you a trading plan by the end of the slide. I will make you a trading plan. I will give you my beginner's trading plan that I used in my beginner stages so you can be great, right? Number two, don't put too much pressure on your trading process. You got to understand, man, listen, it ain't always going to be pretty. It ain't always going to be wins. You going to fuck up, but it's how you get through those fuck ups. It's how you overcome. It's how you get back. It's never how you started. It's always how you finish. So you have to remember that, especially in trading, because it's like, you're going to miss some moves. You're going to catch some moves. It's going to be a process, but it's never, ever how you start. It's always how you close it off. So just remember that. Number three is this, right? Everybody's seen me building accounts, and it's just like, bruh, don't rush when trying to build an account. Building an account takes a lot of precision and a lot of skill, but consistency is key. Now watch this. There's two keywords I want to kind of focus in that, right? And that's the skill and precision. Precision is entering on the lower time frames so you have a better risk to reward, and skill is being able to zoom out to the higher time frames and see where you are overall so you can maintain the move, right? When you're building an account, you want to be able to get in with a decent amount of risk, and you want to be able to exit taking out a great amount of gain, right? It's called risk to reward. We'll go over that later, promise, right? But when you're trying to build an account, you need the precision and you need the skill. So take your time with it, baby. You know what I'm saying? Number four, you have to identify what are you trying to be consistent with. Now, for me, it goes pips, profits, and the whole move. Let me tell you why. I need some type of pips so I'm able to kind of be in and out of the market successfully, right? Like, pips is what's going to buy me my consistency. It's going to build my confidence. It's going to make me feel good about what I'm doing trading wise. So whatever it is that you're doing when you're trading, just go for pips first. After you're consistent with catching pips, then you can go to catch more profits. You know why? The only difference between pips and profits is upping your lot size slowly, right? If you up your lot size slowly, you'll be able to make more of a bag, because you're trading your time for money. So if you're making more money in that same amount of time, you're growing. You dig what I'm saying? So boom, 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 boom. And then when it comes to catching the whole move, that's after you done build your bank account up, you're feeling good about yourself, and it's just like, all right, bro. Now I can really sit here and endure all the emotions I need to kind of catch the whole move, because it's a process. So there's levels to this shit. Just remember that. Number five is this, bro. It's all gonna come with time. Like, don't rush your process. It ain't gonna come tomorrow. It ain't gonna come the next day, but it's gonna come over time. You feel me? Like, it's gonna happen. It's gonna come. So like, just give yourself some time to endure the journey. Enjoy the journey. You know what I mean? Like, you gotta give yourself some time for real. Telling you, man. I look at it like this, right? Once you're consistent with the lower lot size in this game, you can give yourself a raise. Like, you know, when you work a job and you get a raise, your consistency in this game allows you to get raises. So it's just like, you can give yourself a raise at any time. Once you're consistent with the lower lot size, you can up it. Like I said, I'll wait after a week or two of being consistent, then you can go ahead and up that lot size. That's what makes sense to me. You feel me? The last thing is struggling with technical analysis, right? Now, struggling with technical analysis, this is going to be a big one, right? This is going to affect your entries, your market structure, your fibs, your QPs, your supply and demand zones. Everything that I'm naming is your arsenal tools that you use to conquer these markets, right? And again, like when it comes to these markets, you have an arsenal, you have a tool list that you need to use in order to slay these markets. And, that looks like market structure, which you're going to learn about, fibs, supply and demand, time frame correlation, candlestick patterns, trend lines, QP, zones. There's a whole bunch of things in your arsenal that you have. And it's like when you're struggling with your technicals, you can't even do those right or even confidently to know that you're doing it right. So it's like my number one thing for this is this. Get educated, right? Like you're watching this video for a reason. You should be a student of the game no matter fucking what. Like even me, I'm still a student of the game. There's still things I study. There's still things I'm learning. Like I'm forever a student of the game. I don't care how much money I make. It's subjective, right? Because what matters to me the most is being able to take over, being able to grow, being able to flow and be a best version of myself. And I can't do that thinking that I know everything. So just remember, man, knowledge is key. You get what I'm saying? And that's why I'm doing videos like this. So it's like, get educated, man. A proper mentorship is always the best way. Or even this free content that I'm doing. There's a bunch of things that you can do to sharpen your sword. Number 2 is use your resources. There's books like the Candlestick Trading Bible. There's Mark Douglas YouTube videos. Shit, there's even baby pips. There's so much free knowledge out there that you can use to educate yourself on how these things are properly done. Shit, you know what? I'll probably even drop a little something free for y'all at the end of this. You know what I'm saying? And it's just like this. Number 3 is this, right? Apply what you learn. You can study all day, all night, but if you never apply it, you will never level up from it. Apply what you learn. Apply it. You know what I'm saying? Don't be a woulda, coulda, shoulda type of person. Apply what you learn so you can be better. You know what I'm saying? So when it comes to psychology, those are the 5 things that I feel like that are just definitely needed in order to get through your journey. Psychology does get a lot deeper, but I feel like those are the key points in my outlook of it. Now, this next part is basically how to kind of stay in control in the market. And again, these are your rules and regulations for the market. Now, this is like basically a trading plan. Now, my trading plan, a trading plan looks different for everybody. For me, because I'm at this every day, I don't need my strategy on my trading plan. I just need the rules and regulations to kind of cover me in the markets. And I want to kind of show y'all what this looks like, right? Now, the main thing that you always want to start off with your trading plan is your goal. What is your goal in the market? What are we trying to extract? Well, we're trying to catch pips. So pips is really going to be the main thing that we need to focus on, right? And for me, in my beginning stages, it was 20 to 30 pips per position or trade, then I would close. So for example, if I was in an uptrend, for example, and I was buying at a certain point, right? Like a higher low. As soon as that position hits 30 pips, I'm out. If I added another one, as soon as that position hits 30 pips, then I'm out. Shit, if I added multiple of them and this one hit 30 pips and then this one hit 20, I'd close the one that's at 30 and then wait for the one that's at 20 to hit 30. And it's just like, it's 20 to 30 pips per position or trade overall, then you close. Don't forget that. Super key. The next thing is like this, right? For me, there's 2 trending markets. There's an uptrend and there's a downtrend. In an uptrend, you should be buying at your higher low. You should be remembering this. In a downtrend, you should be selling at your lower high. You should remember this, right? Very simple. Just basic things that you want to remind yourself when you're in the market. Then it comes to analysis, right? When it comes to analysis, I always go from the bigger picture to the smaller picture, and then from the smaller picture to the bigger picture. Reason being is I need to see what's going on overall. I need to see where we are in the middle, and I need to see where I am for my entry, right? Then I need to see where I am in my entry, where am I in the middle, where am I overall. Big to small, then we at the small, small to big. Got to make it make sense. Don't forget that. Then I have like things that kind of affect me now, like no retest, no entry. That means that if the market does a certain movement, whether if it's going up or down, it comes back to that area and gets its permission to continue trending. That's what a retest kind of looks like. And you'll learn about that more as you gain some more experience. But if I don't get that, I'm not entering, right? Another one is have patience. Sometimes it's gonna take time for you to see things. You have so much time frame, so much perspectives to analyze. You should be going through those and making sure that those are closing out before you do anything. The next one is adapt and not react. Bro, I wish I knew this sooner. I remember like days where there's like a big move because of news happening and there's a lot of volume. I would be trying to catch that. The best move is not the news move, it's the move that comes after that, the retest. You know what I'm saying? So I just kind of keep it simple. And then we have our confirmation checklist. This is like all the arsenals, things in your arsenals that you use to kind of take a trade or take a position. Like for me, again, there's buying at a lower high. There's selling at there's buying at a higher low, selling at a lower high. There's making sure you have a trend line, supply and demand, QPs. Like you see the list, right? Now, the main thing for me, right, is I need a minimum of two, just two of these things, right? I just need a minimum of two, but there's no maximum. For me, there's no maximum whatsoever. So it's just like a minimum of two because that's going to help you kind of build your foundation properly on what you need to look for. And then again, there's no maximum. So again, having a trading plan is rules and regulations to safeguard you from entering in the market correctly and exiting the market profitably. So just remember, your trading plan should be protecting you. It should help you make a lot of money, but also reduce you from losing a lot of money as well. So just keep that in mind, right? Now we're going on to step 2, right? Step 2 is going to look something along the lines of price action and market structure. So price action to me is one of the greatest things that, that can be done in this game. So when it comes to price action, we're going to kind of just go over that a bit, right? Like price action is one of those things that like, if you use it correctly, it's going to take care of you. But like, I don't think a lot of people understand what price action is. So let's talk about it. So here we are on the charts real quick, and I want to kind of break this down in simplest terms, right? So we have here what appears to be a candle, right? We're going to make this candle red, and then we're going to have another candle. This candle is green. When it comes to price action, you got to learn how to read candles in order to understand what price is even telling you what it's trying to do, right? So here we have like a wick. This would be like the little stem thingy that's at the top of a candle. This would be the little stem thingy that's at the bottom of a candle, right? This would be the stem thingy that's at the top of this candle. And this would be the stem thingy that's at the bottom of this candle. First thing that we got to identify when it comes to price action is the flow. What direction is this candle actually going and what it's trying to tell you? Well, let's start with this. This is what we call a seller's candle or a bearish candle, right? This bearish candle goes from this direction to this direction, which means that right around here, right? Right around here where I have this line at, right? This bearish candle is going to, where is it at? This bearish candle is actually going to open right here, right? This is where this candle opens at. That means that this candle starts from actually right here. So you know what that means next, right? Down here at this body, this is where the actual candle actually closes at. This means that this is where it closed and ended its movement at. Again, it starts from here and goes here. So this is where the candle closes at. Next, right? Lost my train of thought. Okay, cool. So now this wick up here, this is actually going to be something significant, right? If we open here and we went up here, that means that anything past the open, it would have been green because it would have been some type of bullish. But then if we have a wick, that means that we pushed away from this area and we pushed below the open, right? So this is going to signify sellers, because this is a seller's candle. This is going to signify seller's rejection because sellers are rejecting away from this area, right? Now, this wick down here, this is going to kind of signify seller's exhaustion, right? This is where sellers basically, I just put exhaust like that. Seller's exhaustion. This is going to signify the lowest point that the seller's candles went to, but then they didn't have enough volume or pressure to actually close out down there, right? This is very important. If you see a stem above, that means they're pushing away. That means like they hit like imagine like you have a roof or a ceiling above you, right? And you hit it, you're rejecting away, you're pushing away from it. But then if you have a floor and you're hitting it and you're bouncing, that means you can't break it. So that's how you have to perceive these candle movements. There's rejection and then there's exhaustion. Know the difference. If it's exhaustion, that means it doesn't have enough volume, it doesn't have enough momentum. If it's rejecting, it's pushing away from that area. So that's pretty much it when it comes to seller's candles. Now we're going to talk about buyer's candles. Now, a buyer's candle opens at the bottom and closes at the top. It's literally the exact opposite. It's literally the exact opposite of a bearish candle. So now we're going to talk about the details, right? Now, again, this is where it opens at. So now let's talk about this wick. If this is, again, where it opens at, what is below the open? This should be this should be buyer's rejection, right? Buyers are rejecting away from this area, right? They're pushing away. So what do you think this wick means up here? This wick up here means that this is going to be what? It's a buyer's candle. So it's also going to be buyer's exhaustion, right? This is the highest area that a buyer went to and it exhausted. So with this, right, the whole point of this is a simple candlestick breakdown. You want to be able to interpret what these candles are trying to tell you. What is the story? So now we're going to kind of go over a couple examples and I'm going to show you how I do my version of market structure so you can understand the story that this is telling you. All right, so most important right now, we're just going to pick an area and we're just going to start, right? Let's pick an area of right over here and we're just going to start, right? So we're going to look first at these candles right here because what we're doing now is we're simply just doing what we call our candlestick analysis, right? So now we're coming down and we're looking at these range of candles in this area. These candles right here, well, this shows that buyers are rejecting away. So then they pushed up, right? Then this shows this. We have a candlestick pattern right here, which I'll show y'all a little bit better, right? This is what we call a bearish engulfing, right? You have this bullish candle and you see how this bearish candle closed below the open right here. This means that sellers are taking over this area, right? And it's very simple. So now when I mix this with how I perceive as market structure, which if you haven't saw my market structure video, I'll have it somewhere here where I can kind of see it, but watch that whole guide on it. But when I mix it with market structure, watch this. So you come here, right? Then you come here and you come here and you can see what is the trend that is showing you? That we're in a downtrend. Now, this is where reading these candlesticks is going to get incredibly important, right? Because obviously from right here, you can see the trend that this market is showing you. It looks like we're in a downtrend, right? But then pay attention. What do we see all common within this area? We're starting to see a lot of lines, right? Like a lot of these lines are called wicks. And where we see a lot of these wicks at, these are what we see known as either exhaustion or rejection. Remember the candlestick analysis video. So now we're going to take it in pieces of moderation. Watch this. So we already had this bearish engulfing right here. Then we have another bearish engulfing here. Then we have this little piece of this bullish one. Then we barely have this bullish one going up and then we continue going down. So the trend is downwards. But what do we see right here? We have sellers exhausting and then we have buyers rejecting strongly, which means that we hit something, right? When we combine this with another one of our technicals called a support and resistance, aka a QP, which y'all guys will learn about this soon, right? You can see that it hit this area and that it's rejecting. Now, when we get back with market structure, watch this. We trended up and then we came back and we retested. Peep this. We did something called a variation right here, where if we learn how to read this correctly, right? Buyers took over this area right here and we came and we did that retest right around here. So we exhausted, rejected. We had a full candle, which means barely no wick. And then we hit something right here because sellers were starting to reject, right? So we could see, we probably hit something right here. We came back, we did this retest. And then what did we kept on doing? We kept on trending upwards, right? Look at this candle. Then we came all the way up to here. Then sellers came back to the retest. Then we came up to here. Then sellers came into the retest. Then we came up to here. Then sellers did the retest. Then we came up to here. And we dropped all the way down and did another market structure retest. And then literally we just played the game. And you see, when you literally combine this with, when you literally combine candlestick analysis and market structure together, you get your sense of flow on where the market is trying to tell you that it's going. So super simple. So that's market structure and that's price action. Now I want to kind of use my strategy to kind of give you all a couple examples on how it's really meant to be done in the markets. So that way you kind of understand what the right thing looks like and what the wrong thing looks like. I'm gonna give you an example of like a setup and like how my trading plan is super important. So let's actually go back to my charts because I actually caught some stellar moves on there and it's already kind of done for us. So you can see here, I got some technicals on here. Now, this was one of the moves that I caught. You can see that this is the 8-hour time frame. You can see here that not only do I have this eclipse here, this eclipse signifies that, hey, this is a higher high, and that wherever a higher high is, I should be getting a higher low. If you don't know what that looks like, right, that's essentially this, right? Like I'm going up, I'm coming back here to get this. I'm pretty much getting something along the lines of this, right? That's what I was pretty much looking for. And in this move that was caught August 24th, is it? Yeah, not too long ago, August 24th. This is a perfect example of a break and retest that I kind of want to show you, right? So strategy-wise, we were in an uptrend and we transferred into a downtrend, right? You see how I have my structure kind of drawn. You can see everything kind of clearly, right? This move right here that I'm about to make in red, this is what we call our first market structure actual lower high, right? So then this push up broke it. So what happens after this break comes a retest. Let me kind of use the rewind tool a little bit. So let me show you the details of this move, right? Okay, rewind tool, work with me. Let me show you the details of this move, right? Before anything happens, right? This red eclipse is going to signify that, hey, this is the last lower high within this area. And let me just show y'all, right? The last lower high within this area. But then after we pushed up and we broke this area. Notice that we broke right here and both, this is where a bullish candle closes at and a seller's candle opens at. And what I mean by is right here, right? These bodies, right? This is where it closed at. This is where it opened at, right? Because this goes from top to bottom. This goes from bottom to top. So, I'm sorry, from top to bottom, right? So right here is where we have this area of support. We broke this area, right, on this time frame. Let's go down lower. Let's see what that looks like. Same thing again, right? We got a lower low here. We got a lower high here. We failed to make a lower low. This is just a low. We pushed up and we broke and then we retest. So what could you do within this given area? One of your technicals that you could use is breaking out your fibs, right? So now we have our fibs. We have the area of the retest that we need this move to kind of come back to and print upon for us to safely enter. Now it's just making sure that the lower time frames make sense. We can see the structure, we can see everything. And even on this time frame, as low as we are, structure is changing a little bit. So I want to kind of adapt my eyes to what this time frame structure is telling me. It's still showing me these main swings, but now we have these little details of structure that I just want to kind of add within there to make sure that I understand the flow of what this market's trying to show me, right? And at this moment in time, I can see here that somewhere around here, there's a sweet spot. Now, I don't really like a lot too much going on, so we're going to kind of delete this higher time frame zone. We're going to kind of tweak this area to be this resistance area. This is where we're going to kind of take our profit for entering this move, right? Because, again, we should be printing past the higher high, so I just want to make sure I get in at this projected higher low area and then I get my target. One thing that I can see for sure around here is that, boom, we have some type of a retest going on right here. And then most importantly, I want to add my support within this range, right? Which right around here, the 500 QP, that's my overall support, right? This is where we break this previous high. This is the previous resistance. This is the previous support within my area. So now I'm just going down time frame by time frame, and I'm making it make sense. We don't need that. That's the higher time frame structure. All we need is that this is the lower high. This is the higher high. We have our resistance. We have our support areas. So now as we're looking down, we're more so looking down. Okay, we printed up here, and now we're kind of coming back down. We got our retest right here, which is a part of the strategy. No retest, no entry. We got a bullish candlestick pattern right around here where buyers kind of took over, which means that in this overall area, buyers should be maintained, right? So now we just got to wait for a printout above this, right? We got this candlestick pattern right here that buyers are in control with this bullish engulfing. we got the retest, so that nothing should be printing or closing under the retest if we want to take this trade. And then most importantly, lastly, what we have on here is we have another support and resistance area, also known as a QP. So once we break this area, we should be good. If you know the laws of QPs, you should know that once it respects one QP, it's instantly going to go to the other. So now we can go to one of our entry time frames, and now we can see the details. So now just remember that there's always going to be a story within a story within a story with these candles, and it's your job to kind of go down lower and interpretate that story. So what does that look like for you guys, right? That's this right here, right? So let's just go down to our entry time frame so we can make this short and sweet and simple. So this was the higher high of the move. This was where the projected higher low is. I know exactly where I am based on my drawings and based on my strategy. What I'm going to do now is I'm just going to simply add structure into this, right? You can see here, I'm just drawing what appears to be structure for myself. Boom. See, we're getting like a lot of lower lows and lower highs kind of continuing. And then boom, right around here, we get a form of a transition. It looks like here we made our miniature lower, our higher high. Now it looks like we're just trying to find some type of support. We came back down. Every time we hit that little zone, we keep on respecting the range. Now, cool, watch this. Keep in mind, we were in a little miniature downtrend, right? So one thing that we can do for sure is what I call a counter trend line, right? Now, with a counter trend line, we can see here that this looks like some type of significance of a high. So now what we're going to do is we can wait for what we call a breakout. What you really need for a breakout is you need a successful point A and point B for your trend line. This is our point A, this is our point B. Yes, it cuts through price, boom. But now notice this. Notice that after this low point of this zone, we were still respecting, which down here we have a QP, so you can track it. We have our major, which is right around here, right? Make sure we're on point. And now, boom, we have our major. So right around here is where we found some type of support. You can literally see here that price is ranging. We failed to go back lower. We came back to the same area and we respected. And then what did we get right before that? A bullish engulfing. You literally could have took your move here. Boom, boom. Made sure your stop loss was underneath this previous low. And then your high, you could literally trade it from zone to zone. And let's just say theoretically, if we were supposed to play, what we would have went through. Bomb. You would have hit TP for 200 pips. And again, this is how the strategy works. Small risk, big reward, right? You know, unfortunately, you know, a 48 pip stop loss, but you should be using what we call proper risk management. And that's just a part of the strategy here. I could instantly, you know, find more and more moves just like that I've already took. But you know what I'm saying? That's not the point. The whole point is to just know what you're risking for your reward. Like this is another move that I took right around here. You can see these little circles are helping me know the higher lows within the area, which is a part of my strategy. You can see that this move right here, it went up for 81 pips before we even got the big move, right? And this is me just getting my slice of the cake. I'm not greedy at all when it comes to this game. I just like to get my slice and walk away. What do you see here? I got my zone, right? I entered like around here. My stop loss was 16 pips down here to where it retests. I like to give them a certain type of move. You can see that we're profitable. We went straight into profit. Boom, 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 boom. Hit our goal. My goal is anywhere from 60 to 80 pips. I got my 60. My TP got hit. I was able to get out the move. Again, once you use all the components right within the strategy, you will be able to hit. You will be able to win. You will be able to grow. That's just as simple as the process goes. Again, my entry requirements are zones, QPs, everything that we went over before. What's really kind of made me grow from this was my trading plan, right? My trading plan on making sure I enter at a higher low, making sure that I have my pip goal crossed off. These are all very important values that you need when it is that you're taking a trade. Which we're going to kind of talk about next is risk management. And there's good risk management and there's bad risk management, right? Managing your risk is super important, and that's step 4, right? Like, you have to know what you're risking to gain a reward in this game. If there's no risk, there's no reward, like, bro, it's fucking pointless. What are you trading for, right? So that's quite frankly what I kind of find myself kind of like just making sure I reiterate to myself over and over and over and over and over is proper risk and proper reward. Because again, these values are important to me. They're super important to me. So we're going to kind of talk about what risk management is and what it kind of looks like. We're going to talk about it from the perspective of building an account to a certain level and kind of just seeing the overall blueprint of what can happen before it happens. Because going to battle with yourself is all about knowing what you have in your arsenal and what to expect. And with risk management, this is the only thing that you can control in this game. You can only control what you're risking for your reward. It's either going to make or break you if you do it right. But let's show you how to kind of do it properly. So first, we're going to kind of go over a random example of risk management, for example, right? So for example, right, we're going to talk about risk management. Better type it a little too fast. Forgive me, I failed all my spelling tests as a kid. Teachers, if you're watching this, I'm a teacher now, but I still fail my spelling tests. Just kidding. Risk management 101, right? Since the topic is Forex, let's make it on Forex, right? So risk management 101. So let's stay, so what's most important nowadays is something called leverage, right? Now, leverage is basically what's going to give you like your buying power, right? The higher the leverage, the more bigger of a lot size you can do, the more risks that you can use for your capital, right? This game is nothing if you don't have proper leverage. You need leverage in order to grow, in order to flow, in order to be the best version of yourself. So leverage is what's going to kind of give you that buying power. Always make sure that your leverage is definitely on point, right? Cool. So with that being said, with leverage, let's just say theoretically, a lot of people like to ask me what's a good amount to start with or whatever the case may be. I'll say $1,000, right? Let's just say we start with $1,000. We just got our paycheck from work. We got $1,000 left over, right? Now, when it comes to risk, you got to break it down into percentage on how much you want to risk for your reward. How much of that $1,000 do you want to use to make you money, right? So you got to ask yourself. So let's just say in this game, I want to use 10%. I want to use 10% risk, right? So now that you're saying that you want to use 10%, that means you want to use 10% of that $1,000 to make you money, win or lose, right? So now we're going to see what that looks like 10% risk management wise, right? So 10% risk management wise, that's going to look something along the lines of this. 10% risk management. That means that you got to ask yourself, what's 10% of $1,000? If you do this right, 10% of $1,000 should be $100, right? So that's basically your 10% right there. Now, you got to ask yourself, what in lot sizes is going to give you basically, what in lot sizes is going to give you $100, right? That's pretty much how I look at it. So if you do your math correctly, right, when it comes down to this, it should be a one lot. A one lot every 15 pips is going to equal to about $100, right? So you got to ask yourself what it is in pips. Pips. So a one lot every 15 pips is going to be that. Now we got to talk about risk to reward. So if it's 15 pips, right, you should probably want to risk double that. So let's just say you have a 30 pip stop loss, which is wherever move closes you out, and a 30 pip TP, right? Now, let's just say that's what you're risking for your reward. You want to do what's called a 1-to-1. You want to risk 30 to make 30, right? You want to see if you can just get past those probabilities, right? Now, the average trader, statistically shown, that comes into this game, that learns from somebody who can, pretty attribute signs of consistency, they are 70%, 70% accurate, right? And that's win or lose, right? So if they're 70% accurate, let's just say the first, 7 trades, or let's just say 7, that means 7 trades they'll win, 3 trades, they'll lose, right? Or learn from. Well, we'll see if it's going to be a win or loss from this, right? So theoretically speaking, let's just say, like I said, I always like to prepare for the worst. So let's just say they lose the first 3 trades, right? Let me make that bigger. Make sure I can see that. Let's just say they lose the first 3 trades. What would that look like at a 15 pip stop loss? Well, keep in mind, it's a 30 pip stop loss, which means that it's double. So per 1 trade, right? They're losing roughly about $200, right? That's just 1 trade. There's still 2 more trades, right? So that's another $400. That's another $400. So what you have left, shit, that's $600 right there. Bruh, you only got $400 left to play with. And that's just off of 3 trades. So this is horrible, horrible risk management. Or, you know what I'm saying? Like, again, it all goes off of your percentage. This is why keeping track of your risk is super important. Because let's just say if you were trying to take a setup and you lost 3 times, oh yeah, you would be screwed. You would be screwed. So now let's put it in better terms, right? Let's change some things up here. Let's scale back a little bit. I get it. You thought you can do 10%, you fucking can't. It's okay. Let's actually go down to our percentage, right? Let's go down to 5% risk per trade, right? What does 5% risk look like? Well, what is 5% out of $1,000? That's $50. So, you know, now you got to figure out what your 5% is, which is about, you got to figure out what your 5% is towards that, right? For $50. So now, if a standard was $100, what do y'all guys think 5% is going to be? That's going to be what's called a 0.50, right? Which every 15 pips should give us what? $50, right? Same thing, 30 pip stop loss, win or lose, right? 70% accurate, right? They'll win 7, you know what I'm saying? They'll lose 3. Again, theoretically, they lose the first 3 trades, right? If the first trade alone, they're going to lose is $100, right? So it's like, damn, I already lost 10% of my account. Then, shit, they take 2 more trades. All right, cool. They lost 200. Bro, you still have $700 left, right? Out of your paycheck. So then theoretically speaking, right? Let me make this bigger. Back to it, right? They only have $700 left, right? So it's like, it's cool. At this point in time, they have some thinking. They can tweak their risk management. Do they want to stay 5%? Do you want to go to 2.5? Do you want to, you know, scale down in risk, or do you want to stay the same? Let's just say we choose to stay the same. Let's just say, theoretically speaking, they win the next 7 trades. Well, every 1 trade is going to be $100 based on us hitting our 30 pip goal of using a risk management of 1-to-1, right? Of 1-to-1. So if 1 trade equals $100 and they win the next 7, that means they made what? $700. That means that they made everything they lost and more if they win the next 7 trades, which they did, right? That's putting you at a balance of, if I'm not mistaken, let me break out my calculator because I want to make sure my math is mathing, you know what I'm saying? I want to make sure ain't no shame in my game, but it should be 1,400, right? We times that by 2. Yep, 1,400. So at this moment in time, you done made about 1,400, right? You done started with a band, and now you have $400 more in profit. You can see, sticking to your simple strategy, you would have made more money, which is what the game's all about. So knowing what you're risking for your reward is going to be super duper 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 key. So now let's talk about what that looks like when we're actually taking a setup, right? Let's just say, again, all these little eclipses are moves. Let's just say, theoretically speaking, right? Boom, you're following the trend. We're on this 1 hour time frame. Boom, we entered here. Risk to reward. This is our low point that we're putting for our risk, for our reward, right? Keep in mind, this is what we call the long tool. The long tool is a very amazing tool right? This is what you're gonna use to kind of calculate your risk to your reward, right? You can see if you have a balance of what, 700, your lot size is 20. This is the number value in risk, what you're willing to risk. And then these ticks are automatically done based on where you put the range tool at. But if you plug it in correctly, it's gonna tell you instantly, right? You see this little green bar at the top? It's gonna tell you where you are if you take profit. It's gonna tell you where you are if you take an L, right? Well, the bottom ain't really updating. I think I did something wrong. Again, you could either do this manually or there's calculators that you can use. I'll probably throw some links in the bio. But again, knowing what you're risking for your reward in terms of stop loss and pips is gonna be good, right? So let's just say you hit your goal right here of 90 pips or 100 pips. As you can see, it's super easy to get that. And then you want to scale in again. You'd literally just wait for your retest to come in and when it comes out. A lot of people ask me like, hey, Drew, how do I scale into a move, right? This is a big one. Let's just say theoretically, right? I took this entry down here with this risk to this reward and I'm waiting for it to ride up to this zone, right? Let me make that go back. And I'm riding it up here to this zone, right? I get my new higher high. And then let's just say I'm still holding this move because it didn't hit my higher time frame zone or my higher time frame TP. If I get a pullback, right, what I'm doing is, let's just say I want to enter and I want to scale in right here. I'm setting my stop loss so that the move breaks me out of both in profit, but I'm still letting it flow and I'm still letting it breathe. I still have my designated area that I don't want it to pass. I could even make my stop loss my entry. So that way it takes me out of this one. And I still flow this one. That's how I do it sometimes as well. Or I'll give it its own stop loss based on where it takes me out of both of the moves and I make some type of profit. You always want to leave the game profitable no matter what because you live to trade another day. So just remember that. That is super important, super keen when it is that you're flowing and doing this process. When you're trading your own capital, it's very important that you have a risk management plan set in motion and set in set. It's very important that you do calculate your manage for your risk to reward. And it's very important that if you're in an uptrend that you're buying at higher lows and that you're making that your stop loss is either your previous entry or that it breaks you out in some type of even so that you live to trade another day. This is how you're going to scale an account. This is how you're going to grow an account. This is how you're going to grow as a trader. And especially when you're trading your own capital, have a plan for each and every entry on where you want to go and where you want to get out at and make sure that you're able to stick to that based on this game of probabilities. Okay? Cool. So we talked about managing your risk management. Now, step 5 is the most important. Trading your own capital, trading on prop firms, or trading on brokers. Now, as you guys all know, I've been doing an account build, and I started this account build when I left Turks and Caicos, and I started this account build with the amount of $12,333. You can see right now it's at 80,000, basically 80K, $84,000, right? I'm on week 4, going on to week 4, starting like tomorrow, because it's week 4. And, you know, like building this account hasn't been easy, but the broker that I use is Sway. Now, Sway Charts is one of the best brokers that I've used. The reason why I say that is because they have little tools like, for example, like if I was supposed to buy, well, the market is closed. If I was supposed to buy, they have the technology that automatically does the own risk to reward calculations in there. It has the time frames. Not only that, but the withdrawals that I get from the platform are very fast, and it's the industry standard right now. As you guys all know, things have been trading in the trading industry, and Sway Charts is here to save the day. In my retrospect, not only do they give you good market conditions that you're able to execute on that match similar to TradingView. Notice that this is the 2 minute. Let's just go to like the 1 hour. Notice that the 1 hour looks just like how it looks here. Boom, 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 boom. Looks pretty. Let's actually switch it over to TradingView real quick. See what TradingView looks like. Let's make sure that we go to the 1 hour on TradingView. 1 hour. Clean and sexy charts. So you can see that little squiggle. So you can see that ideally this and Sway Charts looks the same. So there's no manipulation. That's for one. A lot of past platforms that I've used, they manipulated price or whatever the case may be. You can see that looks similar. Not only that, but you get the best market executions, right? Like you have your bid, you have your axe, you're able to see how much spread it is. Not only that, you have the quickness of entries. There's no latency. There's no nothing like that. So Sway is the broker I use. If you do want to use them, there will be a link in the bio so you can use them. There's plenty of other brokers, but this is the one I trust. This is the one where I have my $84,000 in. This is the one that I will be continue to trade on and show you guys my withdrawals, my whole process, my everything amongst my trading journey. So if you want to trade with me, use the same platform. As far as for prop firms, there's a bunch of other prop firms. As far as for Forex goes, in the most sense, Sway also has a prop firm as well. There's a bunch of other prop firms out there that you can use. Now, I recommend to just do your homework on them. Make sure that you're reading through the FAQs. Make sure that you're watching reviews. And if you are going to test them, just use one of your own standards. But I personally am not trading on any prop firms right now. I'm trading my own capital. And the reason why I choose to trade my own capital as of right now is because I want to show you guys the power of a dollar and not being able to have these resources. Back in my day and age of trading, 10 years ago, there was no prop firms. There was none of that. You had to save your paychecks and you had to do this. Now, with prop firms, there are all rules, there are all regulations that you'd have to tweak your trading plan around, which quite frankly, my strategy just work with anything. You just have to tweak it and make it so that it works. But what I recommend is if you could trade your own capital and you can build that capital to make you more money, then why not, right? Again, when it comes to just trading in general, you got to put your money where you feel like it's safe, or you got to invest your money where you feel like it's going to be safe. There's a lot of things going on, and like most importantly, like I tell everybody, you're a student of the game forever. Do your homework. Right? Like I use Sway. You don't have to use Sway, but it's who I trust. It's who I have $84,000 in with. Not only just $84,000, I have another bigger account that I can show you right now that I have money in. I trust them, right? I worked my way from a small amount and I've been able to extract. I get my withdrawals very speedy. I'm saying, so you got to find a platform that you can trust. Same thing with a prop firm, right? Prop firms in this day and age, you have to find something that's going to give you realistic market conditions, right? You have to find a platform that's going to simulate or give you these, because a prop firm, from my understanding, it should be simulated market conditions, or should be giving you the same market conditions that you get on the analyzing platform, which is TradingView, right? And it should be fair, right? You should be able to cast your lot size. There should be able to be no issues, no things. And if issues happen, how's the customer service? That's what matters to me the most, the customer service. Everybody hates talking to robots. Everybody hates talking to people that don't respond back to you. How's the customer service, right? That's why I use Sway. Like, their drawing is lit. You know what I'm saying? Like, they get back to me. I remember one time I had a stop loss in the TP set and I couldn't even close out of their shit. I couldn't even close out. I literally hit support up and I was like, bruh, like, come on. I lost money and I had a stop loss in TP and I couldn't even close out myself. You know what these motherfuckers did? They gave me back my money, no questions asked. That's unheard of. But that's good customer service. They care about their people. So I recommend, if you're going to trade your own capital, find a platform that you trust. If you're going to use a prop firm, customize your trading plan to their rules so that way you're able to pass it. And remember, the only thing that we control within this game is our risk management. So if you use risk management correctly, you too will be able to elevate and thrive and become better. Now, I said a lot here. So this was the 5 steps that were needed. Step 1 was psychology. Step 2 is price action and market structure. Step 3 is the actual strategy. Step 4 is the risk management, the only thing we control. And step 5 is picking your platform. So this was basically my free version, covering myself from if I was to a beginner all the way till now, what I would want to focus on in these markets. And that was pretty much it. Now, if you do want to go ahead and take this a step further and you do want to kind of get deeper with psychology, there will be a link in the bio to my free guide on psychology. You can watch it. It's basically like a free mini course that I went ahead and created for you guys on top of the one that I gave y'all here today. So if you want that, hit the link in my bio. You'll be able to access that and much more. With that being said, thank you guys so much for your time. It was your boy, Juicy Banks, and I will see you guys on the next one. Deuces.